Good afternoon, everybody. This is Mark Lambert from the Thetis Pendulum Trading Group. It's August 9th, 2011. It's approximately 1:25 in the afternoon. Of course, I'm awaiting the Fed announcement that's going to come out shortly. Usually on days like today, I do not trade into the Fed announcement because usually the volatility, it's pretty much a crapshoot at that point in time. But once that volatility is done, it usually offers us some pretty cut and clear patterns and also Fibonacci projections and so on that can enable us to trade from that point on. Anyways, I'm partners with Anthony Marino. This is us right here in Thetis Pendulum Trading Group. You can find us at www.thetispendulum.com. And what we do is we have an intraday trading group, and there's plenty of talented traders also in our group. As a matter of fact, some of the analysis that I'm posting right now is not only based on my findings or Anthony's. It's based on the contribution of several people in the group. I mean, if not dozens. I mean, just to name a few names: there's David, there's Steve, there's Nick, Andrea, Bob. I mean, so many people. Martin that just contribute every day with excellent analysis using different types of trading analysis that I might not be, an expert at or anything like that. But when I look at what they're doing and I can see the benefit in it, that's I add that to what I do. And with that said, it's really a great trading group. I mean, I love it here, and I just hope it does keep growing to a certain point, and it can benefit so many traders. But anyways, I'm going to do a quick overview of the long look at the S&P 500. We've broken the trend channel, which we've already mentioned on several occasions that this was a basically we had an area here at 1173. If we break that, I said that we're definitely going to go down to 1129.24. If that breaks, that's definitely not good for the market. We broke the trend channel, we broke that level, and right now, as I can see, we can see a wave 1, 2, 3. Basically, as of last night, several of us were also looking at this area to be bottoming process, even for just a short-term jump, which we're going to get into in a second. But in a longer view, I'm looking for this process to probably bounce up, bounce back down, come back up, and touch this trend channel before it decides to move back down again. It's almost like it's giving it a kiss goodbye at that point in time. But last night, myself and several people, I had posted that I was looking at the 1080 area to 1080-ish area to basically form a bottom last evening. I know this one guy, Bob, who actually said that he was looking at 1077.40 or something like that to form that bottom, and I mean, we came right down to 1077 last night, so kudos to him. I mean, that was like an excellent analysis right there. But with that bottom last night, obviously I did not trade this wave here because I have to get some sleep every once in a while. And as we can see, we moved up 1, 2 waves, 3 waves, and right now as we slightly breach the top of this wave. Not sure if it's exactly done yet, but I'm going to show how I did trade this morning. Bring up an email that I sent out earlier today. Let me see here. Let me give you the daily fibs first too, as a matter of fact. It's an email that I sent out earlier today, just showing another reason why that we should have had a bottom last evening. Usually the 423.6, sometimes it gets breached a little bit, sometimes it just slightly misses, but usually that kind of demarks the end of an impulsive wave. It's almost as if to say that the wave has moved too far, too fast, and now has to regain its legs, basically rest a little bit, maybe move sideways, maybe correct a little bit, and then it can resume its trend once again. I'm going to send this right here as another email that I sent. This is what I was looking at for my early fibs this morning, also using the market internals as indicators. I was noting that this is possibly, at this point in time, corrective action, looking for another move back up again. And I also sent another email too after that, showing how I would have counted the email. I mean, how I would have counted the structure as it was moving up. Basically just filled in the blanks. Because you're looking at the Elliott wave structure, we moved up in 1, 2, 3, 4, 5, and then we did a very clear ABC. and then once again we did 1, 2, 3, 4, 5. But when we did this 5 right here at this point in time, when I saw this structure right here, which I sent out the other email afterwards, I would have probably noted this more as wave 3 at this point, because when I take a look at it inside, we got 1, 2, 3, 4, 5. That should have denoted the top of 3. But either way, it did keep us in the trade at the right place at the right time. And I circle these two structures right here because I want to stress to the fact that many people are looking to count out impulsive waves, which is a great thing to do because you have to do that because it kind of alerts you to when that impulse should end. But I find that the most important thing that any trader should look at, especially if they're using Elliott wave structure, you need to know how market corrects. And with that corrective structure, this ABC corrective structure would have told us that yes, we should still start moving back up in the same trend. We formed a full impulse with all 5 subwaves. Then we did another ABC. Now we're forming another impulse coming up. One trader also noted to me that this had made a 9-wave move, which would have equated exactly to the same thing as a full impulse at this point in time by using structure. But anyways, I took a long at 11:20 this morning, got out at 11:40, and since then I've been sitting it out, waiting to see what the Fed announcement does. And I'm going to show another more recent fib that I just sent out, which is this one right now. Basically, I was showing that this could be a C wave ending diagonal. I'm not exactly sure, but since I trade intraday, kind of look at that as something. If I can grab a few points out of it, then I'm going to grab a few points out of it. Basically, I did go short once again at 11:47, and at 11:47 I waited for this break. We did bounce a little bit, came back down. Now we've kissed the bottom of the trend channel, from what I believe, and I'm still short right now from 11:47. And the market is acting sort of the way it should. Now I'm getting ready to close this out because something, I grabbed another 7 points. Never let a profit run away from you. And the fact is that we are still forming higher highs and higher lows off of this bottom. So anyways, I'm going to use my other computer and take myself out at this point in time. But this move right now could be a completed move. I mean, when you're taking a look at the S&P, let me get back to this one right here. As a matter of fact, this move last night, this drive up, came right exactly to the square root of 10, which is a projection that we've had on this chart for quite some time now, and then backed off down to this level, and now we move back up above it. So basically, just one of those things that's how I count a move intraday. I usually take most of my signals off of the hourly charts, and sorry about all these lines here, but I know what they mean, and some other people also know what they mean. And of course, I weigh all of these charts, all these levels slightly differently depending on which leg I'm in. But that's basically how I look at the Fibonacci projections. There's also the wave counts in the morning. And with this chart right now, if I wanted to, I can delete all the trend lines, all the Fibonacci projections, and so on, and I would still be able to trade it the exact same way just by looking at the structure that's developing. You have a 1, 2, 3, 4, 5, another ABC correction, which would tell me that this should be another impulsive move going back up again, and we could see, that it did make another impulsive move, and I can see 1, 2, 3, 4, 5, 6, 7, 8, 9, as another trader also pointed out, which is where I struck my trend lines. Went short, came back down, figuring that I would at least come back and touch the bottom of this trend line that I placed here, and then start to reverse from there. And then from there, that's where we're going to see what's going to happen. I mean, this could very easily bounce up and keep bouncing up and keep bouncing up under this trend line till it eventually breaks it or just falls away. But like I said, half hour from now, the Fed announcement is going to come out. And at that point in time, I plan on being flat, and I do not want to be trading at that time. I'd rather give the market another half hour, 15 minutes, or whatever it takes for the market to pick its direction, and from there, then we just strike some new fibs and start moving from there. But that's pretty much how I trade it. And I do want to give kudos to many of the other traders right now, also in our group, which are excellent traders, and And this analysis would not be able to be put together without their help. And I hope you can visit us one of these days, and we'll see you soon. God bless, Godspeed, and good trading to you.